Today, I'm hanging out with a guy who has quietly been printing money off the S&P for years with what looks like a ridiculously simple approach, but the real magic is all in his head. I'm talking about Tim Racette from E-mini Chicago roots, got his first taste of the markets on the floor of the Board of Trade, then made the jump to screen trading way before it was cool. He's a pullback trader on the ES, 1 minute chart, 21 EMA, super clean, rules-based system. But what we really get into is his mental game, how to avoid blowing up your day because of recency bias, why you can have a 70% win rate and still be a losing trader, and how he uses R multiples and journaling to actually improve instead of just repeat mistakes. He even has a 2-stop loss rule that keeps him from revenge trading his account into oblivion. We'll also talk about his E-mini community, his live Tuesday trading sessions, and how he turns lonely screen time into a real mentorship environment. So if you've ever bailed out of a winner too early, froze on a perfect setup, or let one bad trade mess up your whole week, you're going to love this one. Here's my conversation with Tim from E-mini. All right, I am here with Tim Racette from E-mini. And so let's just jump right into it, Tim. First of all, thank you so much for being here. It's a pleasure to have you. I'm really curious to hear about your strategies, what you're doing with E-minis. But before we get into that, I really want to know about your trading journey. Like, how did you get into trading?
Thanks for having me. I appreciate it. I'm originally from the Chicagoland area, and so Board of Trade, Mercantile Exchange, lots of trading environments down there in Chicago. So I had a buddy who had an uncle that lived or that worked downtown on the Board of Trade, and so we got to go down there and check out the floor, and all the excitement that was sort of dying at that point. This is early 2000s. Early 2000s.
There was still some live trading going on then.
Yeah. But still an exciting field and area to check out. But those guys down in the pits, it was mostly guys at that point. The few that were left encouraged us to, you don't really want to make a career down in the pits. You should look at trading on the screen. And so they put us in touch with some computer traders, screen traders that were been trading online since the 80s. And that kind of kicked off our journey into the trading world.
Okay. So you and a buddy on the floor of the C-Bot.
Yep.
Were you working down there or just hanging out?
No, we were, I would say, late high school. Okay. So we just went down there to kind of, I guess, apprentice or just see what it was all about.
Right.
And then, like I said, they quickly turned us to the direction of, if you want to make a career out of trading at this point, the future is likely going to be more computerized trading. And at that point, obviously, already there was a lot going on. A lot of the traders would have terminals outside of the pits and then, look at charts and things like that, and then go into the pits to, place trades for clients and things.
When did you first start? When did you decide I'm doing this full time? This is what I want to do.
Probably in college. So I started with swing trading stocks using daily bars before I turned more to day trading or added in the day trading. So I was swing trading for probably 2.5 years and really got a nice rhythm going with that. And again, that's, mid 2000s.
Right.
So stock market is in a nice strong tear going up. We're past the tech bubble, but before the housing crisis.
Okay.
And
tell me about the housing crisis. How'd that treat you?
Yeah. So that's actually when I started adding in the day trading component in 2007, 2008, which increased volatility, more movement, was actually a really good time to kind of add that in. And even though I'd been swing trading and had consistency going with the swing trading component, I still had a fairly small account, that was trying to grow. And even with that knowledge, it still took another good year, I would say, for me to really feel comfortable day trading. So even though it's, both of them are trading, the day trading component added another layer of I would say the emotional side where you're connected all day long and you have the ability to trade. Whereas when I was swing trading only, I was looking at the markets after hours, doing analysis, and then plugging in my trades at the open and basically not looking at them throughout the day.
Ah, okay. So you started doing day trading. You must have learned a strategy. Did you have a mentor of some sort? Like who was showing you what to do? What was the strategy you were using?
So I started out, and I still to this day trade essentially pullbacks, retracements, if you want to call them that, both on the swing trading front and the intraday front. On the swing trading side, I would buy strong stocks on pullbacks, very simple concept, and then intraday essentially doing the same thing just on a smaller time frame. And I learned a lot from Peter Racette, who's a colleague and great guy, great trader. A couple other traders in Chicago that nobody's ever heard of.
Okay,
but
these are guys you
we're
got
really
to talk
influential
to on any given day. You were able to like communicate. Some people's mentors. For me, it was William O'Neill, the guy who wrote the book How to Make Money.
Oh
with
yeah,
Stocks. So to me, he was the ultimate mentor. So I'm asking, like in your case, your mentors, you sound like you were working with, pretty hands-on.
Yeah, we'd sit down for lunch a lot and talk about trading. That was probably the most beneficial time spent with the mentors versus on a day-to-day basis. Talking. We didn't really have text at that time, but I wasn't necessarily calling them and saying, "Hey, should I take this trade or not?"
Right.
It was more a little bit bigger picture stuff at first about, okay, if you want to make this a career, these are some of the important things that you want to watch out for, so you don't so you have the longevity of a career out of it.
Right. Gotcha. All right. So tell us about your strategy. You're a pullback trader.
Yep.
Your website's E-mini-Mind. So tell us a little about E-minis. What are you trading? Because there are obviously multiple E-minis you can trade. And, give us some detail a little bit on your strategy, what you like to look at.
Yeah, so I've focused in on the S&P, so the E-mini S&P. And, a lot of people like to trade the NASDAQ because it's smaller tick values, but I just find that the trade ladder moves so fast at times. Maybe not right now because volatility is pretty low, but it can be a little bit challenging to place orders, I find, on the NQ at certain times. So I've always traded the ES, a little bit bigger tick size, but it slows it down, and that helps me kind of see the chart and be able to place trades. So I'm essentially looking for pullbacks on the chart. So identifying the trend first, using a 1-minute chart typically.
1 minute. Okay.
Waiting for us to pull
pretty
back
fast.
to the pretty fast. I don't have a lot on the chart. I basically have a candlestick chart with a 21 EMA, and that's it.
21
and
bars of 1 minute.
Yep.
Okay.
And when we pull back to that 21, if we're in a downtrend, like this morning, we started off in a little bit of a downtrend, and so looking for a bounce to that 21, to looking for a short setup at that point, and flip side for longs. And
that's a question.
You can use things.
Market opens lower. Maybe you look for that 21 bar to get short. But then the market flip-flops. It just goes up. So what do you do?
Mm-hmm. So that's the nice thing with looking at a smaller time frame. If you have a 1-minute chart up, you could have a uptrend for 20, 30 minutes. And then in a matter of just a few minutes, we turn around, start rolling over and turn into the downside. And even if the entire day was generally range bound, you could have these short, 20, 30 minute trends that you're able to capitalize on as, an intraday trader.
Right. But when do you decide the trend's flipped for the day?
So I look for swing highs and swing lows.
Okay.
And so if we're, just going back to the fundamentals of what defines an uptrend, and if we're making higher highs and higher lows,
okay,
and once one of those swing lows gets taken out, now we can start looking in the other direction your lower highs and lower lows.
So you're looking for
the
support,
21
resistance.
is helpful.
Support and resistance.
Yep.
Okay, gotcha.
Yeah. And the 21 is helpful as a visual. If I can, watch it trending at a nice 45-degree angle, that's a very clean uptrend versus if it's horizontal. Okay, now we're more choppy sideways,
Right.
and then the downtrend would be a nice 45 slope. So yeah, a lot of the stuff from the trading and execution side is very fundamental, but kind of as the EminiMind name implies, the emotional, the mental, the mindset side is really what I feel has been the more beneficial part of kind of developing as a trader. Because it's, the setups, there's a million setups you can use, and it's fairly easy to learn a technique, but being able to execute it and repeat it can be challenging when you start putting real money on the line. And
yeah, absolutely. We're not robots. We're emotional beings. Yep. And as human beings, we tend to look at money as a survival tool. So, our fight or flight response kicks in very quickly when it comes to trading. So, E-mini-Mind sounds like you are leaning, and like you just said, you're leaning heavily into trading psychology. What would you say are like, let's start with mistakes. What are the top type of mistakes you see new traders or even veteran traders make psychologically? Like what are the things that that trigger, say, a series of bad trades in a row, or behaviors that just aren't conducive to good trading?
Yeah, I think a lot of folks start with the idea that they need to, that search for the holy grail. And as soon as they have a down week, they change strategies. And so you're constantly bouncing around and you never get through, a down period to receive those positive trades on the other end. So kind of constantly jumping around from either strategy to strategy or changing up how you're trading or managing the trades each time. So if one time you're manually taking a profit and the next time you're trailing and you're just kind of going back and forth, you end up basing this trade on what happened or what was the outcome of the last trade, which is
the recency bias
tends to be more emotional. I don't want to just close out this trade. So let's say I take, trade number 1 in the day and I'm stopped out. Well, if I take trade number 2 and I get, let's say I have a 3-point stop out and I'm up 3 points. I don't want to just close out or manage that second trade based on my prior emotional attachment to the first trade.
Right.
I need to trade that second trade like it's its individual own trade. And so kind of isolating each trade, each moment to optimizing for that specific trade is something I see a lot of traders struggle with too.
Yeah, that's a hard one. It's called the recency bias. We're affected by what, and the opposite can happen too. I know it's happened to me. You get like 4 or 5 awesome trades under your belt in a row, and you wind up doing trades you would normally otherwise do. You think you get a little cocky and arrogant.
So when you're trading, you want to isolate each trade and trade that trade as it should be traded, as your rules outline you to trade it, and not just based on how you performed the last week or in the last trade. So if I have a stop out as my first trade of the day for -3 points, let's say, on the next trade, if I'm up 3 points, I don't want to just close it out to get back to break even, because there's a good chance I'm leaving a lot of money on the table if there was no signal to get out. And so a lot of traders get so sucked into the emotional side of trading that they constantly change their trading based on what just happened. Oh, the last trade was a big runner, so now I need to trail my stop and hope that this trade is a big runner. And then this trade just goes 5 points and turns around, and then they say, oh, next time I'm going to just have a 3-point target and get out. and they're always kind of on the back foot instead of laying out a set of rules and defining, okay, I'm going to trade this way for 2 months, and then I'm going to assess, 60 trades or 100 trades over that 2 months and determine, what's my win rate expectancy, all of the metrics like that, and use that group larger data set to infer, okay, is this working? Do I need to make little changes and tweaks instead of trying to tweak every little trade?
Yeah, because the emotions they just get you.
Yep.
Especially if you had a number of losing trades in a row. You tend to put on like a catcher's uniform, helmet, like
Yeah.
baseball catcher. You get extra protective. You become a little wimpified.
Yeah. Or you
Sometimes you're
decide you're
afraid
going
to
to
take
double
a trade,
down.
even if it's perfectly set up with your system. You might not
Yep.
take a trade. Uh, I think it's just like human emotion. And
Hmm.
you can't expect, at least from my seat, what I've learned over the last 30 years is that you can't expect to have a win rate over 80%. I mean, that's I just feel like that's nearly impossible. Um, so
Yeah. And to that
you gotta
note,
be okay with a loss. You gotta be okay with it, and you gotta move past it. And I think that's where learning to trade comes from.
yeah. And that loss aversion to where traders want to chase that high win rate, you could have a super high win rate and have negative expectancy, like a losing system, even with the super high win rate. And you could have a very low win rate, 30, 40%, and have a winning system with a very high positive expectancy. So it's more about maximizing your winning trades, taking the most out of the trade versus trying to trade more and increase your frequency.
Interesting. So you obviously have a set of rules that you follow, rules-based system.
Yeah, I keep the objective is keep it simple enough so you can repeat it. You can clearly identify your setup, what you're looking for to enter, and then manage the trade the same way each time so that you kind of remove some of that subjectivity that can pull you in different directions.
So how many trades are you doing a day in on
I
average? I know it's hard to
I
say.
would say anywhere from 0 to at most 5,
Okay.
and 5 would be a lot.
Okay.
I'm focusing on the morning, the first 90 minutes after the NYSE opens. So right there kind of shrinks your time window and kind of keeps bumpers up so that you can't overdo it. But, if sometimes you get in the nice trend and you'll be in that one trade for a long time and you have just 1 or 2 trades on a strong day like that. If it's a range bound day, I'll tend to have a few more if we're kind of going from the top of the range to the bottom of the range and having these small trends throughout the day. But over the years, I've definitely, found that less is more when it comes to placing trades.
So you teach all this through your website. Is that right?
Yep.
And it's
Started as
called,
a
what's the
blog
website?
and EminiMind.com.
Yeah,
So
tell
it
us
started
about
as a
it.
blog, and then people started commenting and asking questions. Originally, it was just a place for me to kind of log my ideas and write things out so I could really clarify and then access it from anywhere. Before, I guess, or around the time of cloud computing and things like that. So I didn't want to have to carry my laptop with me necessarily and have the files on my computer. So then more people started asking for different things. Hey, can you show me how you do this? Or can you do a video on this? And then it kind of evolved into what it is today with E-mini And it's still a collective of articles and things and videos about how I trade and kind of my trading journey. And so
So
a helpful way to learn.
you have a program.
There's a membership area as far as a group of traders that can get together and we trade together, and then
So do you trade
can ask
live,
questions and
or
things.
you trade live, or
Yep.
you do have this a chat room? How do you do it?
On Tuesdays I trade live. We do have a Discord throughout the week that I'll
Okay.
chime in, but yeah, I've been doing the live room on Tuesdays for probably 10, 12 years now. And it's a great way for, people to come in, ask questions, see things happen in real time. We can talk about the markets, place trades, but you're not so really selfishly for me. I don't want to be tied to doing a trade room 5 days a week.
Yeah, I know.
That, the whole goal of trading was to create flexibility. So I didn't want to be tied to
Yeah,
something
you
like
don't want to be married to
five
that.
day a week thing.
I know
And it's
guys who
also, but
do
it's
that.
beneficial.
I was just saying, guys who do that, they're married to it. There's a few
Yep.
guys online, they're obligated to do it. I used to have one also,
Hmm.
but I had someone else manage it, and it's a full-time job that you're essentially signing up
Yep.
to. But people, trading is a lonely business, so I
Yep.
understand from a trader's point of view, want to hear other people's points of view, wants to see what a mentor is doing. So I get that side of it too.
Yeah. It's essentially like a group mentor session. And then you can go off, place trades throughout the week, and then compare, okay, am I making good decisions on my own versus just being dependent on somebody else making the decision for me? So I've seen a lot of folks really develop over the years kind of with that model versus just give a man a fish kind of analogy versus teaching them to fish.
Right.
And so, yes, selfishly, it works better for me that way, but it also really helps
Yeah,
the
but
the
then people
folks that
really
mentor.
learn. They're not just copying.
Yep. Yeah,
So
I mean, that's the greatest thing I can see that when I hear traders, kind of go off onto their own after kind of learning from me or following what I'm doing, and then they feel the confidence enough to have mastered the setups and
that's
mastered their
awesome.
emotional side to be able to trade on their own.
So tell us what's in the members area.
So it's basically the live session once a week. We have access to the Discord where we can chat. I do weekly, sometimes daily trade recaps, and then there's a host of you know like a video archive section where it's all categorized by different types of aspects of trading. So a psychology section, and videos on how to improve your psychology, and the different strategies, and other interesting interviews that I've done or come across over the years with other traders. So it's kind of a collection of trading knowledge, but also the active live trading component.
And is there like a step by step, like where to start if you're new?
Yeah, I have a getting started section. It can be a little overwhelming when you first join to see all of the outline of, okay, here's how to become a successful trader. It's not just going to happen overnight, but you can kind of methodically go through it video by video and learn. Especially if you struggle with certain areas, you can just focus on those aspects right away to help kind of lift you up from the bottom. If you've already mastered a strategy, it doesn't have to be the way I trade or my strategy. You can kind of work on your psychology component.
All right, let's talk about that, because you mentioned like doing a number of trades. You said for example, like over a couple of months, and then evaluating, sticking to a
Mhm.
rule set, and then looking at the data.
Yep.
So how do you do that? Do you believe in keeping a journal? And if so, what information would you keep in that journal?
So I'm a little old school. I use Excel, and I keep it very simple. The time that you place the trade, the direction, your entry price. When I put the trade on, I make a couple quick notes. I put the trade on, just make a note on a post-it or a legal pad, and then once the trade's over or after the session's over, I will add a few more bits of information, like what was the max profit on the trade,
Mm.
how much heat did I take on the trade, and then
What do you mean by heat?
my trade log. So heat would be how much the trade went against me.
Okay.
So that way I can see, you know, on my winning trades, are they just going my direction right away, or am I taking the trade going against me, taking a bunch of heat?
Okay.
And that helped me kind of fine tune my stops over the years to see
Yeah.
that, okay, on these losing trades, I was taking a lot of heat. On the winning trades, they tended to go right away without much trading against me. So those kind of metrics I find really helpful. I always had the most kind of light bulb moments, if you will, when I was going through my trade log on a Friday night or Saturday, not when the market was open. And so even if it's good to have that data. And now a lot of platforms, you can pull the data right from your trading platform. But I like kind of going through and plugging the numbers in and really getting to know, okay, what's my expectancy? What's my R multiple?
So
And
you
kind of
use
doing it
R
manually
multiple.
at field.
Couple
Yeah, I want to
people
know how
have.
big are my winners relative to my losers. Yep.
Okay. And how are you defining R? What does R mean to you?
So R would be how much I initially risked on the trade.
Okay.
So if
Is that a
if you
fixed
risk,
number for you or a fixed percentage? How do
yeah,
you
that was
for
the other thing I
yourself?
was going to mention.
And
A
then how
lot
do
of
you for
traders
yourself
tend to bounce
say
around
what
with
your
contract
R is?
size,
Okay.
and it's helpful to stick with a specific strategy, pick one market, one time frame, and trade that way for 2 months and stick with the same contract size. And that way it prevents you from having a hot streak and then wanting to double your size, or having a losing streak and wanting to make it back and, trading bigger size or adding to losing positions. If you just say, okay, I'm going to trade too many contracts for the next 2 months, and I'm going to assess my trade outcomes at that point, the expectancy, R multiple, winning percentage, that kind of thing, then you can determine, okay, I had a fairly consistent 2 months. I made 60 trades over that time. Now I'm going to try going from 2 contracts to 3 contracts, instead of just, again, making those decisions based on emotion, or, you kind of get in these traps where, especially in bull markets, everyone becomes a trader, and then all they're doing is just catching these strong moves up, and then they increase their size, market starts to turn, and then they lose it in half
Right.
the time.
Right. So that's interesting because in obviously in futures trading, you're trading contract size. When you're
Hmm.
trading individual stocks, which you trading E-minis, but it gets a little harder. I guess you could create a mental contract size, like I'm only going to trade, 10 grand or 50 grand or whatever the number is for you. Do you have on your contract size strategy, do you have like a fixed stop? Let's say you're going long. Do you have like a fixed dollar amount or fixed percentage amount or some fixed number where I'm wrong, I'm out of this trade?
Yep, I use the same stop size, so typically 3 points on the
Okay.
ES. And for stocks, what you want to do is, if you let's say you want to risk $100 per trade. Well, each stock is going to have a different price.
Right.
So take the distance between your entry and your stop and divide that into your risk, $100. And so your number of shares is going to change on a stock or ETF size. Whereas in futures, if I stick with 5 contracts, then I'm going to have the same risk until I change contract size. Yep.
Right.
With the
Right.
same
And you
stop.
can have ChatGPT like write you a script that you can plug right into Excel to do that. You have it right to just tell it what you want it to do in stocks, like
Oh,
you said.
uh,
That formula, it'll write the Excel script. You put it into a
uh,
cell in one of the cells in Excel, and then you have
yeah,
a calculator, and you can calculate it instantly.
yeah, yeah.
Yeah,
Back in our days, they say we had to do all that
yeah, by
manually.
with an abacus. Um, what's the hardest thing for you? What has been the hardest thing for you to learn in trading? Like, what was the thing that was once you got over the hump, then everything changed for you?
When I first started, I had a tendency to want to scale out of winners. So you start increasing contract size, and then you have the opportunity to exit the trade and take off risk along the way. So let's say you have 4 contracts. You could take 2 of those contracts for a profit, and now you only have 2 contracts left. So you have half the size still on, which lowers your risk. You've taken some profit, which adds to the profit column, but it can be a slippery slope if you're taking small wins. It all comes back to that R multiple. And so if you take 2 points, or let's say you risk 3 points and you make 3 points, and you have a 1-to-1 risk to reward, your winning percentage, even at a 60% win rate, by the time you add in commissions and occasional
Right.
slippage and everything else, you're really barely treading water. So you need those winners to really get big. And so not that you're trying to swing for a home run, but you want to at least have the opportunity for the winning trades to run if they if the opportunity presents itself. So just kind of getting control of hanging on to those winning trades longer and resisting that urge to, take it off for a point of profit. If you got 4 contracts and you're taking one off at like a 2R, okay, in and of itself, that one contract has better reward to risk. You risked 1, you made 2.
Okay.
But you want to try to keep as many contracts on as long as possible.
Do your stop loss, or your stop, let's just call it a stop, as a trade is going your way, do you use some kind of trailing stop? And is it automated or is it manual?
So I will typically trail, if I'm long, I'll look to trail the swing lows as we rally, pull back, rally, pull back.
Okay.
Every time we make that little pullback, I'm kind of bringing my stop up underneath that next swing low. So kind of
Gotcha.
using the market to dictate. If you ask, okay, where would the trend change occur? Well, in an uptrend, it's when we take out the swing low. And so using that point as my failure point and my exit point.
Okay. We talked about recency bias for traders. Any other big mistakes you see traders make?
I think trying to focus too much on the strategy. It's important to have a strategy and understand it, but the strategy is a small piece of trading. If you sat me down and opened my computer and put me in a trade, and said, okay, you're in this trade, manage it. I wasn't in charge of the entry. You're just telling me to manage the trade. I could probably get out of that trade in a reasonable manner. It might involve taking a quick loss, but it also might involve, methodically trailing the stop or managing the trade in a way that kind of leads to profitability. So the mindset piece is definitely, if you look at any, professional athletes, entrepreneurs, musicians, any high level performing activity, they're all going to tell you that, you can do the mechanics, you can do the workouts, but it's that mindset piece that really drives home and takes you to the next level.
Visualization is a big one.
Yep.
I live in South Florida, but I know Dwayne Wade was very big on visualizing his game before he went on the court. Pretty sure Michael Jordan, you being from Chicago, was very big on visualization.
And in trading, the visualization is, okay, I'm not in a trade yet. I'm pretending that I've already been stopped out. I got in the trade and boom, I'm stopped out. Okay, I just had a $500 loss. How does that make me feel? And accepting that loss ahead of time, when you go to place the trade, And then once you're in the trade, if you've already accepted the worst case scenario, that can, even just that can help reduce your stress. And then taking a step further and, okay, what's my max daily loss?
Right.
What's my max weekly loss? And picture yourself, okay, I just had a terrible week. I'm down however amount on the week. And okay, can I quote unquote make that back? How long will that take me to make that back? 1 trade? 3 trades? If it's going to take me 6 months to make it back, then my weekly loss is clearly too big. If it'll take me 2 trades, okay, now it's not the end of the world. I can think clearly. And ironically, when you do that, you end up trading better and not having as many of those, max daily loss hits.
Right.
I use a 2 stop out daily loss limit, which is
Okay.
fairly tight.
2 in a row?
2 in a, yep. If I have a trade where I get some momentum and I can tighten my stop and it's not a full stop out, maybe I get taken out for break even or -1 point.
Right.
I don't consider that a full stop.
Okay.
But if I had 2 trades where
Just wrong.
I was stopped
Just
out,
totally wrong.
then
You're not seeing
yep,
it today.
either
Right.
I'm off or the market's just not conducive to my strategy that day. And I think, here's a good one. A lot of traders really like the idea of having a daily profit goal. I'm going to make $200 a day, $1,000 a week. But the market doesn't give you good setups every day. And so the P&L ends up being big days and days with no trades or some losing days.
Right.
But it's those big days that make up. So it's more like a sine wave, I guess, a rising sine wave,
Yeah,
I guess.
like a trend with its
Yep.
support and
Yeah,
resistance.
just like
hopefully.
a trend. Yeah.
So what you described when you closed your eyes is visualization, also known as mental rehearsal. But it's interesting. Your mental rehearsal wasn't about visualizing being great. It was about being okay with your losing trades so that you're practicing mentally being okay. And that is one of the signs, in my experience, of when I really got good at trading, is when I took losses and didn't bug me at all. Meant I was doing a good job of following my system.
Yep.
And I think that is that can be challenging for some traders. I mean, my wife is a really good example. We talk about this a lot, this exact topic. I taught her to trade right after the financial crisis, actually a little bit before the financial crisis. And it took her a solid 5 to 7 years to learn to be okay with following the system and being okay. If the trades aren't working, she doesn't let it bug her anymore. Where in the beginning, she really would judge herself, like every piece of head trash.
Mhm.
And it happens to me too. I mean, every little piece of head trash you had growing up can rise to the surface. So if you're a new trader,
Yep.
be aware of that. If you're following the system, that you only want to judge yourself on following your strategy to a T, and then tweak, like you said, your position size or your stop rules to make yourself
Mhm.
feel okay.
Yep.
Losing trades are part of trading, and learning to be okay with them is a really big deal. So it's a really interesting point.
Yeah.
What's the
2
most?
really good books.
Go ahead. Tell us about that.
So Annie Duke's Thinking in Bets, and then Secrets of the Millionaire Mind. I think that's T. Harv Eker.
Okay.
But so Annie Duke talks about disconnecting the outcome from defining good or bad. So if I have a good setup, I could get stopped out or it might not work out. It doesn't mean it's a bad trade. There's plenty of times where you have a so-so setup that ends up being a good trade. Or you could say it another way. If you just get excited and you buy market and you make a few bucks in the market, it doesn't mean that that was a good trade, even though you made
Right.
money. So you need to disconnect, okay, this was a winning trade. It was a good trade. From, did I follow my rules? And then regardless of the outcome, it's a good trade if it was a valid entry. That's how I define it.
Exactly. And you can have bad trades where you make money.
Yep.
And you can have
Yeah.
good trades where you lose money, but you followed your
Yep.
rules and you
Yeah,
got
that's a
your
tough
rules
one to
locked in. Yeah.
internalize that. But then the other book, The Secrets of the Millionaire Mind, asks a lot of questions and talks about, your upbringing, how your parents thought about money, treated
Yeah.
money.
Big deal.
If you see rich people as soul sucking bad people, internally you might self-sabotage yourself to ever be successful, versus if you see success, the type of people that are successful that you want to be. And then there was also a study
That's a
done
really
where,
big deal, your upbringing. Because,
yeah.
parents, some people, they don't want to even talk about money, the parents.
Hmm.
Or they kind of like, like you said, like they can demonize successful people. On my
Yep.
mom's side, my grandfather always told my mom, you got to do civil service. You'll always have a job to be like a employee of a local government. And he was a teacher.
Hmm.
He
Yep.
worked for the Liquor Control Authority of New York in the
Mm.
1940s and 50s when he came back from World War II, which must have been
Uh,
very interesting. But he became a teacher after that. And that's what he professed to my mom. So she would, because of depression, childhood depression.
mhm.
And so that was a safe job. And my dad, on the other hand, his father owned a car dealership in Brooklyn, across the street from
Mm.
Ebbets Field, and he saw his father being successful. And my dad always wanted to be successful, but wound up at 15 years old going down to the New York Stock Exchange and that went straight into Wall Street. Dropped out of high school
Mm.
to go, and so I had that that kind of from my dad. So I feel very
Mhm.
fortunate for that. So if you didn't have that growing up, it can be extra challenging because you're programmed to have this
Mhm.
negative vibe towards money.
Yeah. Yeah, Rich Dad Poor Dad, the classic book, Robert
Oh,
Kiyosaki, is a
I've never
sheds
read
great
that
light
one.
on that.
Everyone
Yeah.
mentions it. I feel I've read a lot of books, but not that one. I think maybe I need to
Yeah, well, you kinda had that with the 2, you know,
conflict.
dad, grandpa upbringing, yeah.
Yeah, it's true. It's true.
Yeah.
Uh, it, he appears a lot on media these days with various extreme calls on markets, doesn't he?
Uh,
So what keeps you motivated in trading? What's like your favorite thing about trading?
um, I like the puzzle aspect of trading. I wouldn't say excitement or, um, the drive to have more money. I think really what it is the flexibility that it allows.
Yeah.
Trading's allowed me the time and given me more time that I don't have to necessarily be going to a 9 to 5 job and doing things that I don't necessarily want to do. So I can now, with that time, I can do, other things, play with my daughter, and I pick her up from school every day and ride my bike, which is probably the biggest motivator, to get outside
Into
and
mountain
get away
biking?
from the screen. Yep. Yeah, I do a lot of mountain biking and spend time outside. So
Oh,
those things, drive me to be very intentional, focused, disciplined when I'm trading so that I can get away from
yeah.
the screen and get
Not
outside.
having to have a boss is a big one.
Yep.
I mean, I have a wife, so I have that. But being
Yeah,
able to do what you want when you want.
I enjoy that collaborative team aspect, building or designing something and, being in a small team and collaborating, and that stuff is enjoyable. But yeah, not having a boss or, being your own boss is definitely very appealing.
Yeah, absolutely, absolutely. So again, where can people find you? You already mentioned eminimind.com Do you have socials or anywhere else people can check out what you're teaching
Well,
and what
I'm not
you're doing?
huge on social media. E-mini Mind's a good place. You can always shoot me an email. Tim at E-mini Mind is super simple. Happy to talk trading or bikes or anything else really. So
Awesome.
yeah,
I'm into
always
road
open.
biking and being
Yeah.
in Florida. I think you said you're in Arizona, right?
Yep.
Yeah, we're a little spoiled on the weather part. I mean,
Yeah.
I was out at 4:30 in the morning this morning.
Yeah.
Road
Very
bike.
nice.
I think I'm a little too fragile for the mountain bike these days. I back in
Yeah.
the old days, I used to do the BMX bike when I was a kid, but
Oh yeah.
I wiped out so many times I had to I just wasn't good.
Yeah. You think about trading and the progression that it's made from, open outcry to computerized trading algorithms. And I think about, you know, more so extreme sports, BMX, motocross, all the Red Bull stuff that you see, and
Yeah.
just the progression level, Travis Pastrana doing the first backflip on a dirt bike. Now they're
Oh
doing
my God.
triple backflips and front flips. And yeah, so
I
progression is,
I can barely watch it because it's like how I mean, they do it on skateboards too. I mean, the
yeah, yeah,
motocross with it
Tony Hawk. And
like
now,
the bikes and it's just incredible. And I was terrible on a skateboard. I was much better on a bike, but a skateboard, oh.
uh,
And
yeah,
back when I was a kid, they had like the roller skate wheels, and it was like a little plastic board. I mean, we're talking 70s and 80s, like the original
yeah,
skateboards. But yeah,
yeah, the good old days.
that's another conversation. Tim, I really
Yeah,
want to thank you for coming out. Um,
yeah, glad to be here.
everybody watching this, please go check out Tim's site, eminimind.com. See what he's got to offer. I think he's on to something special. Sounds like a simple system, but you
Hmm.
got to keep track of what's going on in here, which is really
Yep,
the truth with any type of trading. So Tim, thanks
yep.
again. Thank you for joining us. You're the man. I will link to your site in the description, and let's do this again sometime.
Sounds great. Appreciate it.